All right, it's official. I am looking for a 12 unit property. I am looking for something that can cash flow right now and get that 7% return, okay? So what does that mean when I'm looking for another property? I'm stepping up my game and I'm going to something that is a lot bigger than what I am used to. So let's look at some numbers at why I believe that a 12 unit. So if we look at everything that I taught you guys, first of all, I'm gonna finance this property 100%. I'm gonna finance all of it using the bank's money and buying another big property. Right now, I have 19 tenants. I have a 19 door and I'm looking for a 12. So I'm gonna go from 19 doors to plus 12. So I'm gonna go to 31 doors in real estate. I'm gonna finance this property 100%. I'm trying this new method to see if this works, to understand if it makes any sense, and I'm going to finance it 100%. Right now, I own 1.75 million in assets. This property, I'm assuming, will cost around $1 million. A 12 unit, maybe I'll get 24 units for $1 million. It depends which kind of properties that I buy. But if I buy something that has good cash flow, good property, good location, I might get a 12 unit for about $1 million. Okay, so what's going to happen if you remember the wealth formula, because you have to put everything together. You have to understand when you're looking at the property, the reason why I was teaching you guys the wealth formula, here it comes. It all comes together, okay? Nothing that I'm teaching doesn't go together. Everything is connecting. Everything goes together with this channel. So if I finance 100%, this means right now I owe about $820,000 to the bank, okay? When I'm gonna finance this deal, it's gonna be 100%. So I'm gonna go to $2.7 million in equity, in assets, and I'm gonna finance the rest. So I'm gonna have 1.8 million in debt. I'm going to be starting to be leveraged at 3 times. That is not a lot. When we're talking about real estate, it's a minimum of 5 times. And some people leverage it 10 times because they get financed by the seller. I've never done that strategy before, but I know a lot of people that went from having 180 doors to 300 doors in a matter of time. These people are growing at a rate of, they're worth more than $30 million. Real estate, this is why, in my opinion, real estate is the best, because you can't do this in stocks. You can't be at 30 years old owning 2.7 million dollars in assets by saving your money, unless you make millions. I've never made millions, and I've been able to accumulate all these assets. So this is why real estate is so powerful. So if we return to this formula right here, so when I was right now was at 1.7 million in assets and 820. So what's going to happen is that I'm going to jump to 2.7 million in assets and 1.8 million in liabilities. I'm going to put an A and an L for liabilities. So what's going to happen is that over time, if you remember the wealth formula, over time, these assets are going to gain value, and these liabilities are going to lose value at a point like this. As you can see, over a period of 30 years, my wealth will have grown on 2.7 million in assets, and my inflation is going to eat away, and my payments are going to eat away at the value of this debt, thus creating a lot more wealth. And as you can see, as soon as my properties take more value, I can refinance. And where am I going to get that finance? Okay, of course it's going to be refinanced. It's going to be financed 100% by the banks, but I'm going to get that money somewhere. Where do I get that money? That's the good question right now. That's the question that we need to be asking, is where do I get that money? I'm gonna get that money from a property that's almost paid off. I have a sixplex that's worth around $350,000, and I only owe $89,000. So if I finance that property, I'm gonna finance that property 80% of its value. And that's what I'm negotiating right now with the banks. I'm calling them up. I'm sending them sometimes I'll just send them a Hotmail just to get the right person to call me. They already know what's going on. They're already prepared. So I send an email just to open up, and I tell them, what I told them is that I don't want to be paying fees. Why? Because when I refinance that deal, instead of paying $10,000, when I refinance that deal, what's going to happen is that I'm going to owe $250,000. And I told them, if you guys give me a great interest rate, what I'm going to do is that I'm going to give you a chance to apply for the new loan that I'm going to do on my new property that I'm going to buy. So that's money on the old loan, and that's money on the new loan. So that's why I'm negotiating. I'm telling them, hey, I'm not crazy. I know what I'm doing. I know that if you can take those $10,000 away, I'm not going to pay for those fees, okay? Always remember, what are you giving them? Don't look at what they're giving you. Look at what you're giving them, because they're in the business to make money and to loan money and to make that money on that money. So remember what you're giving them. Okay, that's how I negotiate. I always negotiate by showing what am I giving. Okay, so let's look at where this money is coming, because I'm gonna have to find 80% on that million. When we're looking at that $1 million, what I need to do is I need to find the down payment, that $200,000. Where is that $200,000 gonna come from? It's gonna come from one of my properties. One of my properties, down payments, is going to come from one of my properties. It's my sixplex. My sixplex is worth $350,000, and I only owe $89,000 on it. So I can finance this at 80%. That's around $250,000 minus that $89,000. I did the math really quickly right now, but I'm supposed to get $191,000 out of this deal. $191,000, and I have equity and I have money in the bank right now to get that other $9,000. So I know that the property is going to give me around 7%. 7%. And I need to keep my loan plus payments and interest at 4%. So this means that my interest must be at a maximum of 3% for this deal to work, because I need it to cash flow right now. This means that when I'm buying this property, let's say it's $1 million, that property is going to give me $70,000 in profits, and then I'm going to give 3% to the bank. Okay, 3% on $1 million, because I'm going to finance it at 100%. That's $30,000. When you get that $70,000 minus $30,000, that's $40,000 in profits. And remember what I said a while ago. I have that 7% payments plus the capital is going to be a 4%. So 4%, that's $40,000. So this leaves me with a $30,000 of cash flow. $30,000 cash flow, but in reality, I'm making $40,000 in profits, and this value of this property is going to appreciate by 4.5%. So that's another $45,000 plus that $40,000 in profits. And then I can use amortization, depreciation to reduce the cost of the money that I'm going to have to pay for the government, because I won't have to pay any income tax on this money, because I'll use appreciation. I'll use the depreciation on that $40,000. I'm allowed to use, if I buy that property for $1 million, I'm allowed to use a 4% depreciation. So that leaves me with $40,000, and I use it on my profits. So profits $40,000, and then I can deduct depreciation $40,000, and this leaves me with zero net income. So this means I don't have to pay any income tax on that money. Okay, you always need to consult a CPA, a financial analysis, somebody that's good with your financial accountant. He's gonna look at your numbers and he's gonna make sure that you're not paying any income tax on that property. And I have everything to my name, so this means I can transfer money from real estate to my account and nothing's going. I won't have to pay any taxes on this money. And remember, this is all legal stuff. Okay, I know it may sound complicated, make $1 million and not pay, or make $40,000 and not pay any. But remember, this is like a business. Okay, the government wants you to spend money to make money, because what they're essentially saying is that the property will depreciate in time, and one day you'll have to put it back in the property so that it can remain at its value. So remember that $200,000, that $190,000, I got that $200,000, and this property is going to be financed at 100%. So it's going to be financed at 100%. Let's just look at the numbers again. Like I was saying a while ago, $1 million, I'm getting a 7% cap rate. This means it's $70,000. I know that the interest is 3%, so that's $30,000. So this leaves me with $40,000 in profits. Remember what I said a while ago, 4% interest and capital payments. So in reality, this is my profits. I'm making $40,000 in profits, but my cash flow is going to be something different. A lot of businesses fail because they don't know the difference between profits and cash flows. Remember, cash flow is king. There's a reason why we call it king, because in real estate, what we're looking for is that cash flow. We don't care so much about profits. What we're looking for is cash flow, because cash flow gives you financial freedom, and it gives you money to buy another deal, and it gives you money to do whatever you want to do. Because if you have that cash flow, that's real financial freedom. When you're looking at something that appreciates in capital, that's another game. It's not the same thing. In real estate, cash flow is king. We don't care about the appreciation. That's secondary. We love appreciation, but it's secondary. What we're looking for is something that's gonna gain that's gonna give you cash flow in the long run. So remember, that's $40,000 in profit. So let's look at the cash flow. Remember when I said capital and interest was 4%. So on $1 million, that's $40,000. So when you take $70,000 minus your capital payments, that leaves you with $30,000 in cash flow. $30,000 in cash flow. Okay, that's about $2,700 a month. $2,700 a month. That's enough cash flow to have fun, to buy new cars, to live the dream. This is why I'm talking about the abundance mentality. I'm not talking about budget, be careful and stuff like that, because I don't believe in that mentality. If you're doing that, it's good for you, okay? But this is not what this channel is about. This channel is about wealth, financial freedom, and enjoying in life, and focusing on what matters is assets, acquiring more assets. If you like this information, remember to like that button, subscribe, and hit that notification bell. Thank you. Have a nice day.